If you're a gifted burnout or an overthinker, there's a truism you've probably heard at some point. You're too smart for your own good. This statement applies to almost every area of life, because whether it's trying to get in shape or grow a stock portfolio, it's easy to get caught up in the noise, most of which is designed to commodify your attention as a means to sell ad revenue. That's basically what I'm doing now. But it's okay when I do it. It's all those other guys that are bad and that you should watch out for. Anyway, join my cult. The truth is, investing is extremely simple. If we were wiser than we were smart, here's what we do with $5,000. Throw half of it in the S&P 500 and use the other half to pick some long-term high-quality blue chip stocks and dollar cost average, say, $675 a month for 15 years. If you're 30 years old, that means that by the time you're 45, you'd be sitting on almost $500,000, assuming your portfolio returns an average of 15% per year. Keep it up for 20 years? Now you're at almost $950,000. It really is that easy. But if you're like me, there's something that holds you back from doing that very smart, very obvious thing. The recurring thought that the world might not exist in 20 years, and that we might bomb ourselves back to the Stone Age, a period of time during which, famously, there was no S&P 500. Besides, your 401k's got you covered in the event we actually get to the good ending. An eventuality that appears to be getting less and less likely as time goes on. So you intelligently allocate your spare funds to moonshot plays on volatile stocks that lose money quarter after quarter. We call these growth stocks. Because becoming a millionaire over a 10 to 20 year time frame is so easy that even a homo habilis could do it, we're not going to talk about that. In fact, they probably have an advantage over us because of their inability to self-sabotage via overthinking. Again, if you really want to grow your bag, just set an auto draw that funds your portfolio on a bi-weekly basis and forget that it exists for maybe a decade or so. Anyway, having a small portfolio can cause you to do things you probably wouldn't do if you were working with a bigger one. That's why I separated my public portfolio into two buckets, the long-term bucket and the gambling bucket. But just labeling them different names isn't enough, because sooner or later, we all know what's going to happen at the end of the day. So I built a wall, if you will, a wall between the growth portfolio and the gambling portfolio. How, you ask? By putting them in separate brokerages, of course. Fidelity for long-term holds and Robinhood for, well, fucking around.
Do not come.
I take the casino approach to this. If I tell myself I'm okay losing a certain amount of money, say $100 before I walk into the place, I can justify losses up to that amount by gaslighting myself into thinking I had fun. Or in my case, as a way to make content for you to laugh at me at. Which, yeah. Definitely not advisable. Fidelity is good for long-term holds because it's pretty clunky to trade options in, which by itself can do a lot to discourage you from overtrading. It's like putting the crack pipe in a locked cupboard to discourage unhealthy habits. The genius of Robinhood's user interface is in its ability to gently encourage you to transact repeatedly. Because we all know brokerages make money when you overtrade. And statistically speaking, you, the degenerate retail trader, are going to lose money or underperform the S&P like 90% of the time.
Do not come.
Particularly when you overtrade. Armed with this arcane knowledge, I brilliantly sequestered a good chunk of the public portfolio into Fidelity, that it may grow, unimpeded by my dark impulses. Because, ladies and gentlemen, my investing style can be thought of as sticking my hand in an alligator's mouth in order to grab a $5 bill, then doing that again and again until I lose my hand. Here's one such play that I'll probably do tomorrow morning. Using the awesome power of margin, I'm gonna buy a highly volatile crypto miner, TeraWulf, ticker symbol WULF. If you'd allow me to misinterpret the price action here, I believe this is what's called a second chance dip. I like Wolf because it's become evident that we as a society have committed ourselves to the idea that fake money and AI hype are real and here to stay. And based off the adage, nothing matters, I predict that this obscene bubble we're in will last for at least another year. Plus, given that I'm working with a small portfolio here, I can just about afford 100 shares of this stock. And owning 100 shares of this thing allows me to, You guessed it. Sell covered calls.
All right, Brain. You don't like me and I don't like you.
So my plan is to basically sell shorter dated near the money calls. The high IV, which is a feature of any crypto adjacent security, means that at any moment I could get hammered with a 40 or 50% unrealized loss. The metaphorical gator's jaw snapping shut on my arm. But it's like they say, you don't lose until you sell. Given its price action and what appears to be resistance here, I might be able to collect $100 or $200 and get out within a few weeks, before it has a chance to plummet down to a sub $10 price. In a normal market environment, not only would a move like this be analogous to reaching for a $5 bill in an alligator's mouth, but it would be like doing it while simultaneously tugging its tail and insulting its mother. But this is not a normal market. The simulation is broken, my friends. I have seen through the matrix, seen the truth. Nothing matters other than the irresistible need to be gambling with thousands of dollars on a regular basis in order to feel alive. And that's what real investing is all about. I guess we'll see where these two portfolios are by this time next year. Anyway, I'll let you know how this all goes, so keep an eye out. And if you want to help subsidize my self-destructive tendencies and support the channel, well, you know what to do.
I'm gonna do it!
At no point in your rambling were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. And may God have mercy on your soul.